Good morning, traders. It's Monday, the 7th of December, 2015. It's 8:01 a.m. Chicago time. As always, thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Not much in the way of news last night. A news item that came out said more conservative central bankers in Europe were critical of the ECB chief Draghi for building expectations of aggressive policy easing last week and then not delivering. And that's in reference to Thursday's drop that we saw that we basically completely canceled on Friday. Germany's October industrial production came out at 0.2, missing its 0.8% target year on year at 0 versus 0.7. Other than that, it's a pretty clean slate, not seeing much news. Crude oil has dropped below $39. The generic contract hit a low of $37.75 on 8/24. Brent crude drops below $42 a barrel, the lowest since early 2009. Right now, crude is trading February 2009 prices. I'm not going to dig too much into that today. Crude almost needs its own broadcast right now. Let's take a look at what we have for today. Today, we're looking for a 2 p.m. Central, 3 Eastern consumer credit for October, expecting 18.0. As far as speakers, we're looking for BOE, Bank of England Speaker Carney, Governor Carney, testifies to the European Parliament at 9 Central. We have Fed Speaker Bullard on monetary policy at 11:30 Central, 12:30 Eastern. Other than that, there's really not much. And I want to remind you again that Friday was NFP, was the unemployment and the employment situation report. And in general, the ensuing Monday, which is today, is quite a sluggish trade. So my suggestion to you, and we'll go over that, we'll go over the charts. My suggestion to you today is to just take it easy, take it slow, especially early on. I would definitely not commit strongly to any one trade earlier in the session. I would keep it light and tight until the market decides what it wants to do, if it wants to do something. But overall, I think we're probably going to see a pretty sluggish day. Since it's Monday, I'll go over what's expected for the week. Tomorrow, UK industrial production, manufacturing production, European GDP, and government spending. Wednesday, German current account, trade balance, labor costs, US wholesale inventories. ECB's Lautenschlager and Nowotny speak on Wednesday. Thursday, the UK has visible trade balance, the BOE, the Bank of England rate decision. We'll have U.S. jobless claims, import prices, and then ECB's Lycanen and Kerr. And then on Friday, we have German CPI wholesale, and wholesale UK construction output, inflation, and then in the U.S. retail sales, PPI, University of Michigan, and business inventories on Friday. ECB's Kerr again. So a pretty mild week ahead this week. Let's take a look at what we did on Friday and what we're looking at for today. So Thursday, we had the sell-off. We had this trending day sell-off on Thursday, and we finished up with a bounce as we typically do. Short-term inventory tends to bounce itself on the end at the end of the day. That's why we don't fade that last move of the day. But Friday, the expectation was for it to try to go higher, pull back to 2047.50, and then potentially jump up. And then I had a slightly more probable play, which was to drop chop and then make a lower low before it starts to bounce back up. If you recall from Thursday, I highlighted this area, this area from Wednesday, saying that this 2092 makes for a weak auction. This is a what I would call an LVN zone, a poorly auctioned area, and the expectation for Thursday was to drop below Wednesday's low, come back in, chop around, and go to 2092, and that was completely wrong. So twice this past week, the primary hypothesis did not work. I found the trade overall for the week fairly odd. Did not, did not. I can't say I traded it very well. It didn't follow what I would expect to be the normal auction process. But then again, why should it? From Thursday onwards, we basically had a lot of disruption, macro disruption in terms of ECB, just a parade of Fed speakers and so on, and then Friday's non-farm payrolls, and then Draghi's comments on Friday, which basically took back a lot of the kind of hawkish perception that the market had on the ECB conference. He basically came in and said, "Oh, well, we'll do what we need to, including buying assets and whatever. We're ready to do it, no problem." And so it was kind of an odd trade last week. But in any case, on Friday, we didn't have much of a drop at all. That was a key item early in the session. The fact that we just got so close but did not tackle the previous gap close, did not tackle the point of control at 47.50, and we pushed straight up. The first burst out of the gate on Friday had a bit of a drive to it. It did pull back a little bit, but overall, when you look at Friday, let's pull that up over here to show you what that looks like. When you look at Friday, even though the auction went both ways in price action, so we went up, down, lower high, lower low, higher low, higher high, higher low, and then we pushed off. The delta did not cross at all the zero line. The delta was the aggressor on Friday was the buyer from the get-go, and it just kept climbing throughout the day. And so Friday, once we close the IB and we have not touched that prior close or prior VPOC, this is a big boulder. And remember, 2050 is a key element here, is a key price. If you recall from Thursday's Trader Bite, I talked about 2050 leading us up. If we don't hold below it, and the way I get that is to look at this major profile right here. So we have a cutoff line right down here. Now it's shifted to 2052. We have a cutoff line at 2052. We have a cutoff line at 2060 quarter. We have a cutoff line at 2066. And what I mean by cutoff line is that's where we go from low volume node to low volume node, low volume node to low volume node, low volume node to low volume node, and so on and so on and so on. Once we take out one low volume node and get above it, then we look for a test of the high volume node, or the most accepted price, rotate, push through. If we don't bounce back, then we're back at the high volume node. If we push through, then we're looking at the next high volume node, on and on and on. Turn this on its side and see it like a mountain range, peaks and valleys. Once we get over a peak, we tend to move quickly to a valley. We fight this a little bit, the market makes an effort, and once it pushes through, it is aiming for the next peak, and then once it gets through it, it's shooting for the next valley, and so on and so forth. And these peaks and valleys are made up with volume. So even though price action tells you what prices trade, But what this is doing, and that's the key, as I've said for many years now, the key to volume profiling is to see how much interest there is in each price. Whereas price action alone is just showing you what price did, which is in my opinion only a small portion of the equation. So not only is price important, volume at price is very important, but how it created that price is also important, and that's the third element that I'm constantly talking about when I'm talking about the auction. So what we did is we pushed through this area, and essentially, like I said on Friday, if we push through and upwards, we're looking for 2080.50 for us to return to this high volume, the highest volume area in the region here. And if we return to the highest volume area after selling off so strongly, then chances are we'll likely push up, pull back, consolidate, and we're looking at new all-time highs, essentially going into the Santa Claus rally into Christmas. So this is what's going on right now. The trade on Friday essentially obliterated. You see this push to 2050, a small pullback, pushing through. The expectation is that the market's likely to pull back to this 2080.50. It's also an LVN from Friday, and then I expect it to base and start to move towards the next big area up, which is 2098. You see it here, 2098 quarter, 2100, 2105, and then it's free to go to 2110, and then above there we have all-time highs from earlier this year. So that's how things are shaping up for now. I know that's a lot to digest here on a Monday morning, but this is what we're looking at. Looking at the overnight. Looking at the overnight action, overall the market has not given up any of the push up at all. It has pulled back to the beginning of the LVN zone, the beginning of this low volume node. You can see it better here on the market profile right there. This is the beginning of the singles right here, 2082.50 area. It's the beginning of the singles, and the singles go down to 2078. This is an important area for buyers to hold if we drop into it. So that's something you might want to mark on your chart. 2082.50 down to 2078.50 is an area that buyers need to battle and hold to continue the move up. And then overnight, we got the push up on the European market open, consolidation pretty much for the whole night, pretty boring trade, and then we dropped off this morning at about 6:30, 6 a.m. we dropped off, and now we have a weak low, a double bottom weak low with a point of control at the low. So the way this is shaping up is that as we open this morning, the expectation, where are we now? All right. So let's clean this up. As we open up this morning, let's thicken up these bars. Okay. As we open up this morning, chances are we are likely to move and test this weak area. Overall, this is a trending profile. We did finish at the top part of the day. We had we had pushed double the IB. Oh, that's not showing up. Double the IB and so on and so forth, and it's pretty much it's a trending day on Friday. It's how we finished up. We're trading 2085.75, and so the expectation is we open. We're likely to push lower, retest, look for buyers below. I expect us to consolidate and in a very contested way work ourselves back up to 2089.50 and test this high to continue as a continuation of this trend day. I'm looking for the overall picture to look something like this. We had the trend, the impulsive move up. I'm looking for a pullback down into that 78.50 area, and then I expect it to push through and take out the 2093 high that we put in on Friday. That's the major expectation. If you haven't seen it, crude oil has fulfilled its pattern. Something that I posted back in early November. Crude oil has taken out that low. Let's clean this up. All right. So just a quick look at this. There's the impulsive move down, crude oil. There's a consolidation pullback. And then as I posted back in November, an image showing a broken arrow for a lower low, and for this low from back here to be taken out, which was 39.58. That was done finally this morning. It took a while. It took all of it took all of November to finally resolve itself to the downside, and then we're in a continuation move now. So I expect crude oil to push down to about 37. The next level down in crude oil is 37.62. I expect it to test that area. Those are lows from February 2009. On an adjusted basis, I expect it to check that and then to start its corrective move back up. Likely to be a very slow process. Anyway, I'll leave you with those thoughts. You have your primary hypothesis for today. If you weren't able to attend the Top Step Trader intervention that I did on Friday for one of their traders, it's posted on YouTube, and of course on Thursday you have your reading order flow and stalking trades webinar. It's also on YouTube. The easiest thing to do is just to go to youtube.com/user/FutureTrader71 and to subscribe to the channel, and that way you're notified when something's posted. Otherwise, join the mailing list, which is in the description of this broadcast. I'll leave you with that. Good luck today, and I will catch you tomorrow. Take care.